Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities recovered this week as G7 central banks kick-started the rate cycle. The Bank of Canada and the European Central Bank cut policy rates by 25 basis points each in line with market expectations, as inflation in Canada has fallen within the BOC's 1 to 3% target range, while Euro area inflation is gradually declining towards the ECB's 2% target, although inflation in May ticked up slightly. Major US equity indices trended positively at the start of the week amid declining US bond yields, but paired gains on Friday on stronger than expected new jobs data and early earnings growth in the US. Asian equities recovered this week, led by Korea and Taiwan markets on moderating US rates and weaker US dollar, despite mixed economic data from the region and foreign investor outflows. Back home, Indian equities experienced a significant surge in volatility. The Nifty index fell the most since March of 2020 on a surprise Lok Sabha poll results that saw the BJP-led NDA alliance winning 293 seats, much lower than public opinion polls and exit polls towards the end of the election. The sell-off was driven by sharp foreign investor and domestic investor pullouts. Markets recovered though later in the week after key alliance partners extended support to pave the way for BJP-led NDA's return to power, while the Nifty index scaled new heights, clocking a gain of 3.4% for the week. Broader markets underperformed Nifty index, with the Nifty Midcap index up 2.9%, while Nifty Small Cap index was up 3.1% for the week. Among sectors, IT and FMCG led the winners with gains of over 7%, while utilities and capital goods led the losers with cuts of over 2.7% for the week. The Indian fixed income market also witnessed a surge in volatility after the surprise Lok Sabha poll results. Bond yields rose sharply on the day of the result, driven by significant sell-off in the bond market. Sentiments recovered later after the pre-poll alliance partners paved the way for the NDA's return to power. The 10-year Indian government bond yield rose 4 basis points to close at 7.02%, while the 3-year and 5-year Indian government bond yields fell by 3 basis points each. The INR appreciated 0.1% for the week to close at 83.4 per dollar, as the impact of foreign investor pullouts was balanced by declining US bond yields, lower crude oil prices, weaker US dollar, and strong gains in domestic equities. INR gold rose 1%. Brent crude recovered earlier losses in the week after ECB cut policy rates, fueling hopes of easing by the US Fed later in the year, boosting demand prospects. We had quite a few macro updates for the week. The more important one, of course, was the RBI's Monetary Policy Committee. The key highlights for the June 2024 meeting included the RBI's Monetary Policy Committee meeting for June 2024. The RBI MPC decided with a vote of 4:2 to keep policy rates unchanged at 6.5% and retained its monetary policy stance to remain focused on withdrawal of accommodation. On growth, the RBI revised its GDP growth projection for fiscal year 2025 to 7.2% from 7%, with risks evenly balanced. The average CPI inflation for fiscal year 2025 was projected unchanged at 4.5%. Forecasts of above monsoon and buffer stocks of key crops could bring respite to food inflation. On liquidity management, the RBI stated it will deploy an appropriate mix of instruments to modulate both short and long-term liquidity to ensure that money market interest rates evolve in an orderly manner and financial stability is maintained. The RBI indicated that it will continue to monitor evolving inflation dynamics and incoming data for the economic outlook for its policy alignment while supporting growth. It also pushed back on expectations that it may follow the US Fed in timing of its policy pivot towards easing. The second update was on India's manufacturing PMI, which came in at 57.5 in May of 2024, below market forecasts of 58.4 and 58.8 recorded in the previous month. This signaled a slower but still robust manufacturing sector amid a softer rise in new orders and output. Meanwhile, new export orders increased to its highest level in over 13 years, with a broad-based demand across geography. Also, employment rose at the strongest pace since March of 2005. On the cost side, input prices rose, driven by higher raw material and freight costs. The third update was on India's services PMI, which came in at 60.4 in the month of May 2024, marginally lower than 60.8 recorded in the previous month. Despite the deceleration, new orders continued to rise substantially, supported by a favorable economic and demand conditions, though growth was tempered by fierce competition and a severe heat wave. New export orders saw significant improvement, with growth reaching its highest levels since the series began reporting in September of 2014, driven by strong demand from Asia, Africa, Europe, and the Middle East. On the pricing front, cost pressures intensified, with notable increases in the prices of material and labor. Finally, business sentiment soared to an 8-month high. At this point, I'll take a pause and thank you as always for listening. If you enjoyed the podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.